fair value gaps or order block. Which of these two should I use when I find both of them lined up? So guys, for those of us who trade ICT or the SMC, most of the time we find the imbalance and then the order block lined up at the same level or next to each other, and these two are point of interest for us to know when or where, or give us a hint, or high probability of where to put our entry and when not to put our entry, right? So guys, I get these questions from you guys sometimes. Which one do you use? Do you use the FVG or do you use the order block? So people, without wasting much of our time in this video, I'm going to break it down for you guys how I get to use the both of them. For those of you who have been following our channel, if you watch our order block video, I did mention that a criteria for an order block to be valid, it needs a fair value gap or an imbalance. So whenever you find an order block, you definitely should find a fair value gap. If not, that order block is not valid. All right. Though reverse is the case for the FVG, because sometimes you can get a fair value gap without an order block. But without wasting much of our time, let's hop on a chart and let me get to break this down for you guys. So people, I'm going to use GPUSD to illustrate these to you guys. All right. Now, like I said, the fair value gap and the order block. First of all, we have to understand what they both are. So like I said, the fair value gap and the order block. If you watch the order block video, just like I mentioned earlier, you should know that before an order block become a valid order block, or before an order block still stand to be valid for price to come into it, it needs an imbalance or a fair value gap. So there's no way you get order block on your analysis or on the chart or in the market without getting the fair value gap. Though reverse is the case for the fair value gap, because there are places where you can get there are instances in the market you can get fair value gap without getting an order block. So let's use our last week analysis to walk through this. All right. Now, this the first stuff we have here is what an order block from the M15, right? This is our 15-minute time frame. This is an order block, right? Now you can see that after break of structure to the upside, the last candle that created the push, right? uh the last candle created the push that break a structure is this guy, right? And then it also took the previous candle low, so it is turning to be an order block. Now it also have this imbalance here. Why? Because this candle and the other block candle have a space in between, and most traders get confused, like this is an FVG, this is an order block, where do I get to take my trade? Some people just risk it and enter just at the right the beginning of the FVG and leave the stop loss at the base of the order block. But you can see how ginormous your risk is going to be. All right, so this is one of the problem we face. And some people also just see the FVG and try to just risk it and put their orders there, and then the stop loss is below, which is very risky because it still have something to mitigate here before pushing up. And from the 1 hour, we have this place to be an uh, uh, fair value gap. I just want to walk through it, then before I can get to show to you guys how we get to tackle them. So we had a fair value gap here. You can see in this nail there's no order block, but there's a fair value gap. Why? Because there's a ginormous candle in which the next candle after it and the one before it don't have any interaction with each other. So this part of the candle is what is a fair value gap. All right. You can also see we have a break of structure. We have a pullback down here, and if I go to the lower time frame, I'm sure price mitigated something, and then we had a push again and a break of structure here, and then on the 5 minute, on the 15 minutes again, on the 15 minute, price mitigated an order block right there. You can see the order block candle, and right at the tip of the order block you can see there's a gap between this candle and the order block candle. So we have an FVG here, price mitigated the order block, and then price is currently what, pushing up, and this is going to be our target. Right now, how do we get to interact with all of this? How do I get to tackle it if I find myself price approaching here and I have the FVG at the top like so, and I'm also having what, order block at the base? What do I get to do? Now, for those of you who always follow our channel, or for those of you in the community, I do tell you guys that everything that happens in the market matters, right? And every movement of the market is a particular trend on another time frame. This is the 15-minute time frame, and there are time frames that are lower than the 15 minutes, right? Now, if you look at this impulsive move to the upside, it's just like an impulse, just impulse, little bit of retracement, and then another impulse. But if you go to a lesser time frame, let's say the 5 minute time frame or the 3 minute time frame, you are going to see very well that this is a significant uptrend on that time frame. Push up, drop down, push up, drop down, creating a series of higher highs and higher lows, right? And also, if when you see market reversing downside like so, push down, go back up like so. You can see the market creating what lower lows and lower highs, meaning what we had a shift of an uptrend to a downtrend. But on this time frame in which it is just a little push and a little drop, it's as if it's the whole of just an impulse and then a little bit of retracement for the continuation. Now, if on my higher time frame just like this, I have FVG and then the other block lined up here, right, on my higher time frame. What I do is I go to a much lower time frame. And when I go to that much lower time frame, since I have known that, let's say, for an instance, right, this is our FVG right here, right, and then this is our other block right below it, right, and then we have price that went through, right, and then we have all of those things lined up. So we are looking for price to do what, to come back to any of those, and then we can sell. We can get to join the buys and keep buying up. Now, if you notice how price will come through it, the major thing is how price should come through it. If I go to a lower time frame now, you can see that price came in like so, in a downtrend, like so, creating a series of lower lows and lower highs. Now, when price come into my FVG, which is the first point of interest, right, where price meets first, which is our fair value gap. When price comes into it, how I approach this thing is that I have to make sure that this downtrend on the lower time frame have to change to an uptrend. We need to see price give us a character change on the lower time frame downtrend to create an uptrend, to start creating an uptrend before I'm able to join the price after a little bit pullback. What I'm trying to insinuate is that when we have an FVG here and we have an order block here and we're having this what series of lower lows and lower highs coming into any of the 2 point of interests, I have to see the last significant lower high on the lower time frame, right? On the lower time frame being broken through before I'm able to determine if that particular PDR that was mitigated earlier is going to hold or not. Let's say we have price meet our FVG like so, right? And then price broke through and closed above the significant high. You can see the significant lower high here, and price goes above it. Then it's going to be a confluence for me that yes, price is likely going to change what, from creating lower lows and lower highs to start creating what, a high and then higher highs and then higher lows and higher highs, like that. That is how I get to know. All right. So whatever price mitigates first, you have to make sure that the trend that came into that mitigation, the trend that came to do that mitigation, has to be changed. Until that trend is changed, it's only going to be, a roller coaster for you. Let's say for instance, price mitigated the FVG, right? And instead of breaking through the last significant high to create a higher high so that we can start an uptrend, right? Price only created a higher low, like so. And then price created another low. And definitely, price is definitely not going to what? Start going up. And buying here on the FVG is going to be a mess. You just have to wait for price to come now to the order block and then we see. So sometimes you can see price will not change trend on a lesser time frame on the after mitigating the FVG, you see that price is still creating the lower low. You can see that price came down to our order block, right? And until it breaks that particular high, which is this last significant lower high created on the lower time frame, until price breaks and close above it, then we can now know that yeah, price is going to respect the PDRA that price has what mitigated. Just coming into or mitigating that PDRA does not signify that, or does not signify or signal the change, or a continuation, or that particular PDRA being able to hold price. So on the next point of interest too, after the break of structure, you can see we have what, an FVG from the 1 hour. If you look at this time frame, I didn't pick out a point of interest here because for those of you who are used to my way of trading, you know my hard time frame is the 1 hour, right? So I had the word FVG from the 1 hour, and then there was no order block on the 1 hour. If you also look through this using our order block criteria, we only have, and there was no order block here because this also was mitigated. So there was no order block here, so we only filtered what, the FVG from the 1 hour. Now for this, if you're on this time frame, you can also see that we have another FVG right here, right? We have another FVG right here. So this particular video is not only for, when you have let's say when you have it's not only for you, for you telling when you have an order block and an FVG. Sometimes you can have double FVG, sometimes you can have double order block, all in what, in the discount or in your premium or in a relevant point of interest area. If I draw this for a discount and premium, you can see these two PDRAs or these two FVG falls what, at a good level for me to be able to buy price from. You understand? So whenever you have two PDRAs lining up, at a nice point of interest zone for you, you also use this approach for it. All right. So you can see we have the first one from the 1 hour, and then we have this one on this time frame. If I'm to settle for this one on this time frame, you can see price didn't even come there at all. But on the 1 hour, you can see what, just like I said, when price went through, right, price came down. You have to understand how price came down, and that is where you're going to tackle this problem from. How price came down. If price came downward in a downtrend, this is a 15-minute time frame, so it might look like just, you know, a little bit of retracement, just like that, and drop. But if I go to a much lower time frame, let's say the 3 minutes or the 5 minute, you get to see that it is a clear downtrend, right? So since it came in a clear downtrend, just like I illustrated here, since price came in a clear downtrend in the lower time frame, we have to wait for what, the last significant lower high on that time frame to be broken through, so that price, we know we have what, a change of character. Because when price was coming down, lower lows, you know, we are having what, break of structure, break of structure, break of structures, right? So the moment price broke through this guy, we know what, we have a change of character, which is what, a change of trend. So for this, let's go to the 5 minute time frame to see what really happened when price approached our point of interest, right? So the first point of interest is this guy. So the moment price comes to your point of interest, you just have to go to a lower time frame to listen well to the trend that came to your point of interest, and then wait for that trend to change, so that you can now get that confidence that yes, that PDRA is the one that's going to hold price. But if price approaches that point of interest and doesn't create any change of trend from that trend that came to the point of interest, just know that that particular PDRA is just there for what, smart money trap. So let's go to the 5 minute for this example, and get to illustrate. So like I said, you can see clearly now that what, we came in a downtrend. So we have what, our high, we have what, low. Price broke through this guy, because you can see we are having what, an uptrend, high, 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 higher low, higher low, higher low. So price broke through this guy, change of character happened here. So we are now creating what, a lower low. We have a high, we have a lower low, we have a low, lower low, right? Now we have what, a lower high, and then we have a lower low, right, like so. Then we have what, a lower high, and then we have what, a lower low, like this. And then we have this one, and we have this one, right? So you can see price played around it a little, right? If I listen to this and talked about, you know, liquidity sweeps, from here already there was a signal that this particular guy is going to hold price. But I'm not giving you guys that tip for this video. I'm only showing you guys how to deal with it when you have double PDRs, and how to deal with it with what, a change of character approach, right? So you can see we have what, these are our what, our lower highs. We have this lower high, lower high, lower high, lower high, lower high, right? So the moment, instead of price to keep creating what, lower highs like so, so that we can know that this guy won't hold, price didn't do that. Instead, price created what, a higher high. Price created a higher high. This high is higher than this last previous lower high. So price created that high. From there, we know that what, we have changed our what, character. So we had a change of character right here. We had a change of character right here after price broke through the last significant lower high. So we have a change of character, which means what, we signals what, the change of trend toward an uptrend. That is that is how I get to figure out which of the PDRAs that work. So the moment price break and give us a change of character here, I know that this PDRA is strong enough to hold on price, or the FVG here is strong enough to hold on price. All right. So this is simply how I do it. Whenever I find FVG order block, or FVG, or whenever I find multiple PDRAs at a particular price level in which price is likely to buy from, you just have to look at from the time frame that you have spotted the point of interest from, listen to price to come to it. When price approaches it, go to a lesser time frame, and then you'll be able to see clearly that it is a trend that came through that PDRA. When the trend changes after approaching that PDRA, when the trend changes to the direction of the market you want to, for the direction you want to go to, or the direction in which the market overall is looking at, then you can be able to what, filter your entry and have a trigger for yourself. So guys, I hope I've been able to clear a little bit of confusion that we all face talking about, you know, order block or FVG, or talking about when you have multiple of these PDRs at a particular level. Thanks for watching, and stay highest.